All right, our next speaker is Steve Bennett from Charter Hall. Please welcome him to the stage, please.
Good morning, and thank you for having me speaking today. My name is Steve Bennett. I've been with Charter Hall now for a bit over 10 years, and prior to that, 7 years with Macquarie. All Charter Hall does is specialises in unlisted commercial property. And just by a show of hands, can you put your hand up if you've previously invested into commercial property funds before? Okay, so only about a third. So I want to do two things today. For those that aren't familiar with the sector, I want you to walk away from today's presentation understanding how it can fit within your portfolio and the income benefits that it can bring to you. For those that have previously invested, I want to try and draw out some of the key things that you should look at, whether it's a Charter Hall fund or anyone else's fund in the market, and the key risk areas that you should be looking at. So obviously what I'm about to say today isn't financial advice, and do read the product disclosure statements accordingly. So look, what is unlisted direct property? Well, it provides monthly or quarterly distributions. We think that's one of the key advantages that it offers to investors in their portfolio. It's like the name suggests, unlisted. So it's not traded on a regular stock exchange. The values of the units are driven by independent valuations, usually by top-tier firms. We only use top-tier firms at Charter Hall, and those valuations are undertaken every 6 months in our case. Our key point of difference is we want to make the highest quality, that is the institutional grade property, available to high net wealth investors, self-managed super funds, and retail equity investors. We think that's our key point of difference, so you don't need a $20 million cheque to access some of these assets, like our wholesale capital funds and the pooled vehicles. We make it available to everyone. Unlisted property has low correlation to the other major asset classes like bonds and equities, meaning it just moves in different ways. And obviously it has less volatility than the listed property market, and it doesn't mean listed property is bad. My employer, Charter Hall, is actually a listed stock. It just means that undeniably unlisted property funds don't have the price volatility that our listed peers do. So a little bit about Charter Hall Direct. Well, we've got over $4.5 billion, over 80 properties, and we've got income yields, depending on the underlying product, between 5.7 and 7%. We've been doing this for a long period of time, over 18 years, and we have over 13,000 investors across our suite of funds. Importantly, one of the things we're very focused on is WALE. So WALE is just some property jargon that stands for weighted average lease expiry. The longer the lease terms, the more secure the income streams payable to investors. So that's a key thing to be aware of. The higher the occupancy, the stronger the tenant, and the longer the lease term means that the manager can continue to pay your distribution and income returns with greater certainty over a long period of time. And so how have we gone over a long period of time? Well, over 18 years, we've launched funds, raised money, bought assets, returned the money to investors. We also have open funds now, and you can see here across the suite of funds, the light grey being the benchmark returns, we've consistently outperformed over a long period of time. And we've all heard the saying, past performance isn't a guide to future performance. And you know what? That's right to some extent. But it does give you an idea of the track record of the manager. Have they been able to buy assets like they said in their offer documents? Have they invested wisely? Have they taken on a prudent amount of debt? Because although our income returns are between 5.7 and 7%, I can tell you if we took on more debt or bought lower quality assets, I could increase that distribution return overnight. But that isn't something we want to do. We want to offer the highest quality assets to investors. And this slide, I love this slide. If there's one thing you take away from unlisted commercial property funds, so those investors in the room that haven't been exposed to this sector before, it would be this slide. What you can see there is the dark blue lines are the income returns, in this case from commercial office funds, over a 20-year period. So this isn't cherry picking a 3, 5, 7, 8.5 year period. This is looking at what has this sector done and what does this class of investment offer investors over an extended time frame. And you can see here, while the capital value moves up and down, the grey bars, it obviously came off in the GFC like other asset classes. What has remained consistent is the income level that's been paid to investors. And I'm very fortunate. I'm now going to show a short video and give you an idea of the type of assets that Charter Hall invests into. So this is a short 3-minute video. I'm quite fortunate. I'm not explaining some FX fund or an equities fund. One of the benefits of commercial property, you can see what you're invested into, you can understand it, and hopefully this video will give you a bit more idea of that.
We have here a world-class facility, which if I had my time again would be my first choice of where to study. We will see thousands of students come through these wonderful learning environments and provide our future leadership of our state and our nation.
One Parramatta Square is one of Western Sydney University's most important strategic initiatives. It's the most important project that we've undertaken in the last decade. It's a step for the university to move into the heart of Sydney by placing a vertical campus right in the heart of Parramatta.
We, some years ago, decided to take a strategic approach to really understanding the education sector. It's been a wonderful journey for our team to understand what really drives a university, particularly one like WSU that's trying to create vertical campuses and something that's going to connect their students much more to corporate life.
This is the most technologically advanced building in an Australian university, and I think it would stand up internationally. And we have infused technology right through this building.
The technology in this building is really great because it allows the students to have a really collaborative environment in classrooms, especially the screens sharing option that we have.
With technology all around, you have lecturers facilitating learning in a flipped classroom, and that's an innovation that we're very, very pleased to be bringing to Parramatta ahead of many other universities in Australia.
To have teaching spaces and hubs where lecturers and students can interact, where you can work as teams, it's a tremendous building. And we know already the feedback we're getting both from the lecturers but also from the students is really positive.
What I really like about this campus is the collaborative spaces that it provides. So it gives us the opportunity to book our own rooms to work on assignments with our group members, and also it has a really quiet environment that no other campus can provide with all its study booths.
Every level has a space or spaces for you to study, whether that be by yourself or with a group of people. It really motivates me to want to study and want to be at uni as well.
This is a great partnership with Charter Hall, a wonderful opportunity for us to be the tenant in this building.
It's been fantastic for us to deliver it on time, on budget, and to create a world-class facility. It's also a showcase. We've started speaking to a whole range of other education organisations, and I think we will see this as being the first of a number of investments Charter Hall Group make in the education sector.
What I especially love is that this will be the heartbeat of a precinct where we will see businesses come in, where we will see integrated facilities, which means we're not just creating a learning environment here, but an entire new vibrant community. I feel extremely inspired, and may this building inspire thousands of others to reach their full potential into the future.
Look, that does give you a really good snapshot of what we like to do at Charter Hall. So that building benefited from a 15-year lease to Western Sydney University. Being brand new, had very low capital expenditure, great for investors. And we actually partnered up with our $5 billion wholesale fund to buy 50% of this, because it's a very large investment, allowed us to access that highest quality property, but spread the diversification and the asset concentration. So I just want to spend a minute now in demystifying a little bit on the type of assets that we invest into. So you saw a typical office building. What you've got there up on the screen is 3 recent examples. Mary Street, a very large asset, around $275 million, benefited from a 10-year WALE. So remember WALE, weighted average lease expiry, simply a measure of how long the lease is contractually locked in with the tenant. It means they can't break the lease, there's no get out of jails, they need to continue to pay the rent. And importantly, the tenant at that asset was the Queensland government. So if you want tenants that are going to be there forever, You want federal, state governments. They're great tenants to have in the portfolio. The second asset is a recent industrial acquisition, and I've got another 30-second video on that which will run you through it. But what I would encourage you to do, if you haven't looked at industrial property before, e-commerce is really revolutionising this sector. Doesn't mean it's the sole driver, but all the headwinds you've read about for retail property and retailers going out of business, flip it around. Where's the beneficiary in that? And industrial property is a key winner. And finally, Shelley Street, we again partnered up with our wholesale fund. So instead of needing $20 million to invest in that wholesale fund, we made 50% of this investment available to our investors through our flagship fund, the Direct Office Fund. So the Direct Office Fund, just as an example, this is the kind of thing we do tend to make available. It actually has our lowest distribution yield. And I've done that intentionally because like when you invest into residential in every investment class, it's not just about the headline return. It's how much risk are you taking on to achieve that. And at Charter Hall, we like to invest in the highest quality assets. We put prudent gearing, around 25 to 45% into the investment, and we focus on that security of income. So in this case, a WALE of 8.4 years, an occupancy rate of 99%, and we pay the income to investors on a quarterly basis. As an example, the Direct Office Fund income return over the last few years continues to increase. So this isn't some magic that Charter Hall are doing. This is a benefit of the Australian commercial property sector. In this case, the fund benefits from 3.6% fixed annual rental increases across the portfolio. So that means every year our tenants have to pay us additional income. Again, it's contractually locked in. And as a landlord and fund manager, all we do is we simply collect that and pay out higher income to our investors as the fund grows and those lease terms progress. And at Charter Hall, we also are focused on delivering options for investors. I don't know what people want to invest in, but what we do provide is a number of options that allow people to select and choose. So we've got a very large office fund which focuses on the CBD markets. We've got what's called the Direct PFA Fund. It's over $1 billion, and over half the income in that entire portfolio is paid by federal and state government tenants. We've got a Direct Industrial Fund, and we were the first to make this sector widely available to retail investors. It's a trend that our offshore investors, whether they're in our wholesale or pooled funds, caught on to arguably quicker than Australian investors. But it's something that will continue to benefit from some of the tailwinds and structural changes that are occurring. And I'll show you a very quick slide on what an industrial property looks like at the moment. So you can see here, this asset is located, it's tenanted by Mainfreight. Mainfreight are a $4 billion listed group on the New Zealand Stock Exchange. So again, focusing on that tenant strength. You can see here how big the shed is. Very high clearance means it's very usable for not just Mainfreight, but for other big users. And importantly, when you're looking at industrial property, being close to major infrastructure is a key advantage for tenants. In this case, it's right near the M5 and M7 motorways, meaning that's a key point of the reason why the tenant chose this property. And finally, we've got our Diversified Fund, which is now around $150 million. It recently picked up a Bunnings asset in Claremont in Perth. For those that don't know Perth as well as Sydney, Claremont's the equivalent of a Mossman or a Double Bay. So being able to secure a Bunnings in such a tightly held, fantastic location is a real coup for that fund. And finally, I'd just like to thank you again. Hopefully you've learned a bit about unlisted property. For those that aren't familiar with Charter Hall as a manager, you understand how we like to do it. Long-term income, security of the tenancy, and we like to increase the distributions to investors over time. So thank you.